Uh-oh, things aren't looking very good for the stock market bulls. Hey everybody, JJ, Bull to the Bust. It is Wednesday, October 28th, 2020. Just wanted to put this report out here with some quick updates and some quick market analysis that I wanted to bring you, not just from myself, but talk about what some other market analysts are saying. Now, first of all, the Dow absolutely got crushed today. And a lot of you have been sending me PMs, DMs. Is it PMs or DMs? PMs, private message, direct message, DM. You know what I'm talking about. A lot of you are messaging me and asking, hey, JJ, I thought this market was going to be propped up. We thought they wanted to make it look good for the November 3rd event. Well, let's break this down. So you're going to see ups and downs. It doesn't mean that it's not going to go up again next week. I am a little bit surprised, though, that they are allowing the markets to drop. Maybe the plunge protection team stepped back because of the election that's coming up. And that's what I try to stress here. No one knows the inner workings or the plans of this economic propped up system, including these markets. So prepare for a wild ride if you're investing in this market. All I can say, I've been out of the market. What I'm in now mostly is a small bit of crypto, precious metals, some minor stocks, and then cash. That's about it. Of course, real estate, as most of you know. But yes, prepare for volatility. And after the election, that's when I'm really going to be watching these markets to see how the markets react, or to see if they're going to let some major drops take effect. Right, we don't know. If you know, down in the comments, if you have the inside scoop, let me know and let us know. But anything goes. I mean, they could be taking a hands-off approach before November 3rd. We'll have to see what happens. But we do know that the president's out there and he is bragging about people and how much they've earned or how much they've increased their 401k. We've heard him say that time and time again. He's using that as a strategy. But ask yourself, if you have money in the markets, or if you did have money in the markets, or investors that do have money in the markets, would now be a good time to go long before the election when we don't know what's going to happen? It could be contested. Both sides are going to accuse the other side of wrongdoing. This is going to be one of the most, I think, contested elections in history. And I wouldn't want to be in these markets right now. So ask yourself, are investors really in this? Or is this all going to be stimulus or Fed driven? Okay, and that's just another reason why I prefer to be in safer assets at this point. And we're going to talk about gold and silver here in a little bit. But let's talk about a recent interview. And this was an interview out of CNBC with David Rosenberg. And he says the obvious, what we've been saying for years, is that the economy now is just driven by stimulus. It's QE to infinity. And let's just listen to a clip right here.
Well, look, we have to assess, what really drove that big third quarter rebound in GDP. Most of it was the lagged effect of the stimulus. Most of that's already been spent. We also had the reopenings and the inventory.
Okay, so there you heard it. Most of it was the stimulus. So there's going to be this GDP number that comes out. Maybe it'll be better than expected. But why? It's because of the stimulus. The more stimulus you give out to people, the more it makes the economy look good, because people go out and spend the money. And all the spending gets calculated into the GDP. And yes, it can help bring some jobs back. When more people are spending, it's going to create more demand for workers. All right, but how long can this last? Can you have an economy that goes forever just based on stimulus when there's no real jobs here, or very little real jobs, and we're talking about manufacturing jobs? If keeping an economy going or keeping an economy strong was as simple as creating stimulus or creating currency out of thin air and handing it out, which can be done in multiple ways. You saw direct checks to the people via stimulus checks. It could be done by endlessly liquefying the banks. Therefore, banks can keep lending even though they don't have hardly any money in reserves. And that makes the economy look good, because the more people borrow, the more spending occurs. Again, an illusionary economy. But how long can this last, and how long until we see inflation really, really start ramping up? We've already seen rising prices. The cost of cars, the cost of homes went up during the lockdown recession. How insane is that? The cost of the average car and the cost of homes went up during the worst recession since the Great Depression, where we actually witnessed unemployment rise higher than what we saw in the Great Depression in the 1930s, right? Simply, from the outside looking in, that's pretty amazing. But when you look at the manipulation, it's not really that amazing. When you have a fake economy, it can be manipulated beyond anyone's wildest expectations. But the dangerous part of that is when the stimulus gets pulled back, when the QE ends, look out below, because it could be a massive, massive collapse. And I wouldn't want to be long in these markets if and when they decide to let this market drop and end the stimulus. The bigger the bubbles get, the more danger you have to be careful. You have to be really careful. And that's why we've seen many well-known investors now looking at gold and silver. We talked about Warren Buffett taking stakes now in gold miners. Why have central banks been hoarding precious metals for years now, and they've been ramping up their precious metal purchases? Right? We have a stimulus economy. We have a QE economy. And also, rising prices gives people more confidence to go out and spend. When people see their home prices go up, they're more confident. And another scary thing that's been happening is home equity lines of credit are re-emerging. And this is out of bankrate.com. As the mortgage market calms, lenders resume cash out refis. So we have more people borrowing against the equity in their homes. Now you would think that the bigger this housing bubble inflates, that lenders would be more cautious, right? Higher home prices when wages are stagnant and falling doesn't make sense, but yet mortgage companies are now resuming these cash out refis, which they did pull back on at the beginning of the shutdown recession. We also saw credit card companies at that time dropping lines of credit. It was harder and harder to get balance transfer offers, but now those balance transfers, cash out mortgage refis have resumed. So things are back to normal, even though not much of an improvement in the economy. If you pull back the stimulus, if you pull back the support and the liquidity for the banks, this economy is in real big trouble. Right? So how do we protect ourselves? Get ready for worst case scenario in either direction. Inflation, hyperinflation, deflation, crash, correction. Whichever way it goes, we are going to be prepared. Let's take a look at the gold price return. This is a website that I found that calculates the gold return. Let's go back to, let's say, January 1st, 2000. It's over 20 years ago, of course. And we see that the gold return is 589%. That's an annualized return of almost 10%, so not bad. All right, now let's go to January 2020 and see what the year-to-date return is on gold. 27, almost 28% gain year-to-date. And when you annualize that gain, that increase, we still have a couple months left here in the year. You're going to be looking at almost a 35% return this year if it continues at the same pace of gains that we've seen during the first 10 months of 2020. And silver is an even bigger return. So everybody, thanks for watching this report. Prepare. If you don't have any hard assets, you may want to add that to your basket, to your preparation to protect yourself. Link down below to the bullion dealer that I like to use. It's SD Bullion. Great service, fast shipping. There's no longer the long wait times. There was like 30-day wait times when silver really started going up in price. Now we've seen a pullback. We've seen a correction in silver. I'm ramping up my purchases a little bit here because we've seen a pullback in the price, and that's what we call buy the dips. So thanks everybody for watching. Appreciate you being here. Thank you for your support. Stay prepared, stay well, stay safe. Peace.